Shae Russell here, editor of the Daily Reckoning Australia, and I just thought we'd take a quick look at what's happening over in the US market today. Now, Friday last week marks the start of what's known as the US earnings season. Now, what that is that's a 2-week period where all the companies in the US announce their quarterly earnings. So this April, what we'll be analysing is we will see all of the corporations in the US announcing their first quarter results for the 2018 financial year. Now, in this batch of first quarter results, what we're going to find is how some of the Trump tax cuts have actually affected some of the businesses. So I'm expecting to see quite some positive information coming out of these earnings results. And I also think they're going to have quite a positive effect on both the Dow Jones and the S&P 500. However, what we should be paying attention to is the companies that have a lot of their earnings that come from offshore. Now, the reason for this is the US dollar is being quite weak against major currencies like the euro and the Japanese yen, for example, but it's also quite weak against the Aussie dollar as well. So the weak US dollar does mean this will boost some of the earnings for companies that make a lot of their money outside of the US. So companies, for example, like Procter & Gamble and Johnson & Johnson, they're both likely to report decent earnings this year, again, because they have a large offshore customer base. But in addition, 3M, 40% of their earnings, only 40% of their earnings are American-based. The rest are offshore. Microsoft is in a similar boat with only 54% of their earnings coming locally, the rest coming from around the world. So the weak US dollar is probably going to boost their returns for this particular quarter. However, I actually believe, when I looked at the charts earlier today, I believe that there is a strong technical pattern in the Dow Jones forming called a double bottom. Now, I'll get you to have a quick look at the chart here. So what I'm seeing is we've got the Dow Jones that has come down from its recent high of 23,600 in early January, and it plummeted quite quickly to around 23,860. Now, I've marked this with a little red line underneath. Now, that's about an 8% fall from the high. The Dow Jones then did a very short, quick rally around about 5% before slowly trading down again for the last 2 weeks of March, again testing that February low of around 23,800-ish again. However, we've seen a recent uptick in the Dow Jones. Now, I believe that this could be a double bottom forming, and if it does, it's actually a bullish signal. So I expect that the Dow Jones will trade higher over the next couple of weeks, and I do believe that there is every chance that the Dow Jones will aim for that 26,000 mark again. Now, to get back to that price point, it's really only a 6% rally, which can happen over 2 weeks. It's not unheard of. Furthermore, if you just take a quick look at the moving day average, the simple moving averages here, so the 50-day and the 200-day, the 50-day is the purple one and the 200-day one is that mustard line you're seeing. They're both quite far apart and they're both in very much a strong uptrend. So for the moment, what we're seeing is that the US market should do quite well over the next few months, and that the recent downtrend that we saw in February and over March might have just been that temporary correction that the markets were looking for. Well, that's all from me today. I hope you have a lovely day. As always, feel free to comment below and make sure you subscribe to the Daily Reckoning Australia so you can get our latest insights in your inbox. Thank you, and I'll see you later.